Today we're going to move fast, so pay attention. So let's crack open this chart. See what's going on in the stock market today. All right. SPY was up 0.6% and we're still stuck between this trading range of 426 and 430. And if you switch over to the hourly chart, you can also see this is starting to look like a bull flag. Anytime you get a bull flag, the chances are we're going to break out and go to the next leg higher. However, wait for the breakout for confirmation, which is that break above 430. So on the daily chart, you're staying bullish above 426. And if we break below 426, you're looking for the gap fill at 423. And if we get the breakout above 430, that is an extremely bullish breakout, which means we're likely running all the way up to 440 and higher. Jumping over to the NASDAQ 100 triple Qs, we were up 1.24% today. And again, we're back over the 5 EMA with a bull trend, and we're still in the bear cave between 350 and 360. Now keep in mind, just because we're in the bear cave does not mean we can't go higher. There is still the chance we do reach the top of the range at 360. However, watch that resistance on the way there at the previous daily high at 355. So critical resistance in the triple Qs will be 355 and 360, and critical support is down here right around 347 to 348. And if we break that support, look for a run all the way back down towards 337 and then the gap fill at 333. On the Dow Jones, we were up 0.49% today, and we did break out to another closing high above 338, and we are bullish above 336 with the upside resistance at 341 and 346. If we break support at 336, look for a retest of the rising 20 daily moving average around 334. On the Russell 2000, we were down 0.37%, and the Russell is really just cooling down at the strong resistance zone between 187 and 188 because we were outside the upper boundary band and just going too far too fast. We did get the bull breakout above 185, so that's now going to be support, and if we break below 185, we could run all the way back down towards 178 to 179. And as long as we hold above that support, we're still making higher lows and higher highs in the short term. On the ARKK ETF, we are up 1.02%, and we're still looking bullish above 41 with the next upside targets at 43, 44, and then just below 46. You can also use the risk level of support down here right around 40.5. On the VIX, we were down 2.08%, and the VIX continues to crush to lower and lower prices, which tells us there's no fear left in this market, which is exactly what you're going to see in a bull market. On Bitcoin, we're currently up about 1%, and Bitcoin is still in jeopardy of going down towards 24,000 while it's trading below 28,000, and we're instantly more bullish if we get the breakout above 28,000. On Amazon stock, we were up nearly 2.5% today, and we're back over the 5 EMA, and we did bounce off of that support at 121, so we still have the bull trend and the bullish price action as long as we're trading above this support. If we lose the support at 121, we're likely coming back down towards 117. And the next upside price target will be 128 and then 133. On Tesla stock, we were up 4.58% today, and Tesla has the next bull breakout above 230, and I still think we're running up to close that gap just above 260. So continue to stay bullish because this stock has a lot of room to run. It has been heavily suppressed to the downside, and now it's starting to break out, and you're seeing it all happening on very nice volume. The bull breakout above 230 tells us we're likely going to 260. And the risk level is still down here at the breakout around 215. For example, even if we come all the way back down to 215, that's a buying opportunity for the run to 260. But I think a lot of people are missing this run, so don't be surprised if we just go straight there without a pullback, but you always need to manage your risk. And right now the risk level is still all the way down there at 215 because of how vertical we're moving. On Apple stock, we were up 1.55%, and Apple did bounce off of the support right there at 177, and we're back over 179. So it does look like we could be retesting the previous all-time high at 182. And if we break that, then we're going to start looking at closing all-time highs in Apple stock. Stay bullish above 177, but if we break below it, you have the gap fill below 176, support at 174, and then the stronger support down there at 171. Financials were down 0.09%, and we're not getting bullish until we can get back over that 200 daily moving average, and we're very close to doing so. Industrials were up 0.18%, bullish above 101.5 and developing a bull trend. Healthcare was up 0.64% and could be starting to bounce from what could be a higher low, but we need confirmation with the break above 131. Yet more bullish if we break 131 because we're likely going to 137. Energy was down 0.43% and really just getting too far overextended. However, we are likely running up towards the gap fill below 84 before we get rejected and go fill the gap at 73. So jumping back over the S&P 500, do not ignore the fact that this looks like a bull flag and it's a very obvious range between 426 and 430. So trade the range and then get ready to trade the breakout once we get confirmation below support or above resistance. Let the price action do all the talking and understand this is still a bull trend, so the path of least resistance is still higher prices. Don't forget you can also still claim the 50% discount on the Stocks Channel Discord or Bank Trade Alerts, and you can find out those details in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.